important confirmation. So here's May 17th. This is a 60-minute candlestick chart on May 17th. What do we have in the red square? Bearish and a bullish engulfing pattern, a morning star. Same thing, same date on May 17th on the 30-minute. This, by the way, I didn't mention this. This is a variation on the morning star. You could have more than one small real body between the black and white real body. And this is a 15-minute. Same thing. So 3 different time frames. We're going to be looking at using multiple time frames intraday in a couple of minutes. But 3 different time frames saying, okay, the market definitely, although in the daily chart you really can't see if that was a really important test of support, but looking at these intraday charts, you say definitely that was a successful test of support. Now this is good for both intraday and swing traders. Swing trading. Use multiple time frames. It doesn't happen that often, but if you get multiple time frames, intraday time frames, like we saw before, showing a bottom or a top, I would be all over the trade. So here, on this daily chart, we had a morning star was confirmed at 125.93, and on July 19th, we're going to go to an intraday and show you what we had on the intraday. So this was confirmed. Let's round it off at around 126. Okay. Look at the intraday here. Okay, on the 15-minute, at around 125, just rounding it off, that is a hammer. That lower shadow is twice the height of the real body. Okay. What do we have there on the 30-minute? Again, on July 19th, in the red rectangle, morning star. Okay. Okay, that morning star was completed at 124.88. Okay, now remember, on the daily chart, the morning star was completed around 126. So you're looking at reversal signals over 100 basis points earlier than you would have gotten on the daily chart. And then on the 60, yeah. On the 60-minute, what do we have? A piercing pattern. When you get signals like this, and normally I won't go less than 15 minutes. If you get a 15 to 30 in the 60-minute, all giving you various candlestick signals, this is a very high probability trade. So, and here it was completed at 124.88. So essentially you had 3 different time frames confirming a potential bottom almost 100 basis points before you would have gotten it on the daily chart. Never trade without knowing about the news. And the reason for this is if there's an important number coming out, stand aside. Okay. Obviously, there are going to be times where a surprise news item comes out and the surprise news item can overwhelm the technicals. There's no doubt about it. I'm not enough of a pure technical analyst to say all the news is discounted. I don't believe that. If you get a surprise news item, the market could blow through support or resistance. The Japanese say that just because the water's calm, don't think there aren't any crocodiles. You could have all the technicals lined up and a surprise item comes out, you have no control. But if you know a balance of payments coming out, an unemployment number is coming out, why take a trade in front of it? It's a coin flip. So, for example, here, the water looks fine. Speaking of the crocodiles, I would be perfectly comfortable selling short here, the doji, confirming resistance, and then the market pushes above it. I don't remember what the news was, but this is what's going to happen. This can happen, and we have no control over this. Okay. L. Okay, we're still looking at the word discipline. Let go of emotions. Okay. Psychology. Okay. It's human nature, first of all, not to accept losses. That's why I suggest putting stops in at the beginning. And this is why, how many of you have trading journals? Everybody should be using a trading journal. Right. The reason for doing the trade, the stop-out level, the risk, what happened, lessons learned, and that's a great way of helping you get very, very objective about the market. Very important to have a trading journal. Lessons learned and so forth. Now, the challenge we have is what in psychology is called anchoring to a position, okay, or anchoring to an opinion. So in the markets, what this would mean, if we're bullish, we tend to focus on the bullish news and downplay the bearish news because we want our opinion to be confirmed. On the flip side, if we're in a short position, we're going to feel like this. We can't do that. We have to, and this is what the candles are really good at. By using the candlesticks correctly, it'll really help foster an objective view about the market. Many of my institutional clients know the candles inside out. The reason they use our service, I don't want to know their positions. They get completely objective advice from us, and they like it. That's that outside voice. So here the market is moving down. If we're short and we were emotional about this or anchoring to a position, we'd say to ourselves, hey, I'm short, and the market's making lower lows and lower highs and lower closes. You know, I'm cool, right? I'm right. I'm never wrong. But really, if we analyze the candlestick signals, what are these candlestick signals showing us? This is the pound yen. What is it showing this in the pound? Right. As it's moving down, even if you didn't remember the hammers, those long lower shadows, right? You should really be saying to yourselves, yes, the market's ascending and I'm short, but these long lower shadows are showing me I should scale back a little bit. If you can, stand aside or step back from the market. Ideally, one should be also able, depending on what the market circumstances are, to go from I love the market to I hate the market. Most of us are not going to be able to do it, but here's the case in point. See how the market tested support and the red lines there? Okay. And you might say you like the market every time it tested the support, but as soon as the market broke the support level, old support should become new resistance. You really have to say the market is telling me something different now. I don't like the market anymore. Many of us are not going to be able to go from long to short, okay? But to be truly objective about the market, to step away from the emotions, you have to say, okay, I may have liked the market before while it held support, but I don't like the market now because the market told me it failed to hold the support area. We're not smarter than the market. We're always picking up those little clues the market is giving us. Pace the trades according to the market environment. Okay? That means that we should be looking at what I call being a market chameleon, just changing our stance according to what the market is doing. Each session, the market is giving us new information. And to be a really good trader, we have to always assess what the market is telling us. The market today is not the same as the market yesterday. So this was a chart we had seen before. Remember, with the surprise news item, we would have been negative on the doji, but the market pushed above it. Okay? But now we have new information. The market had a resistance area. So although the surprise news item really pushed the market higher, we're now analyzing the market in the condition of the new environment. What's going to happen now if the market's good? Old resistance should become a support level because the market's changed. With those doji, the outlook was negative. The market pushed above the doji. It's telling us that our outlook should adapt to it. And because it was a prior resistance area, old resistance should be new support. Okay. Adapting to the market. And this section has to do with using maybe adjusting stops or taking some profits. So here, okay, what pattern is this? Quick. Okay, this is a piercing pattern. A bullish engulfing pattern would be if the white candle wraps around the black candle. Almost a bullish engulfing pattern, but not quite. Okay, what's first support on this? Where's the support level on the piercing pattern? And give me a number. Low. It looks like 119. Okay, 119. All right. So based on this, what's happening today, my support area would be 119. No problems with that. Now, time moves on. This is that piercing pattern in the green semicircle. Is first support something different now? Okay. How about over there? Because the market is telling us, yes, we still have support near 119, maybe 119 and a quarter, but now first support is 120. Could we have known that on the piercing pattern? No, because we did not have the new action. The unfolding action. So now we say to ourselves, okay, there's a potential support area at 120, and maybe the market